Hello, hello, hello. It is Monday, May 19th. Thank you all for whoever got on last night. There's a good amount of people. It's kind of a last minute decision to hop on. There's a lot of to break down over the weekend. But how's everybody doing today? Hopefully, y'all had a good weekend. I got out and golfed for the first time in a while and had a pretty good round for me, at least. Probably not compared to a lot of people, but got some fresh air, got some time to hang out with some friends. It's a good time. Man, there's a lot going on today. And I have a lot more DePIN stuff to focus on today. And some breaking news, too, that just dropped in the last couple of minutes about Hive Mapper. So pretty fun stuff there. Let's see. I have a good quote to start off with today. It says, become friends with people from all walks of life. Broadening your horizons will improve your life in untold ways. To say, this is very true, and kind of goes along with not judging a book by its cover. I learned this, many times throughout my life, but one story sticks out in particular when I was in sales. And my boss, we'd go run our appointments. We'd have to call in the results after the fact into our call center. And they always said, no matter what the house looks like, always go in and pitch them. And I was selling solar at the time. Because even if they have trees shading the roof, whatever, maybe they're not the best candidate, you can always get referrals because they know other people that may have a good house for solar. And I remember I went in and I met with this one homeowner, and going in, I'm like, there's no freaking way this guy's going to pass credit. Just like in my mind, had made this up. And he ended up running a $50,000 check for a solar system and closed the sale. And from that point forward, I was like, you know what? Should always go in with an open mind. Don't prejudge people because you never know. So that is my story of the day. Let's see here. We've got some good stuff. We're going to start with, let's take a look at Bitcoin. Let's take a look at Bitcoin and some of the DePIN updates. Y'all check it out. Bitcoin is running back up. Man, we did see it drop earlier this morning, and it's amazing seeing the sentiment shift so quickly on X. We saw it get to 107,000 yesterday, then it dropped last night down to below 103,000, and everyone's like, it's over, bull run's over. Everyone's an expert, right? Until they're not, and then they delete the tweet. Of course, that's how it goes. But we'll wait and see. There are some interesting predictions I'm gonna call out today as far as where Bitcoin's going, about Ethereum versus Solana, and when alt season may be coming. So speaking of that, let's take a look again at we do this every day, but take a look at the alt market cap. Obviously, again, we peaked back in December. Following the green index topping out, I'm going to continue talking about that because it's something that I'm keeping a very close eye on. The fear and greed index yesterday, the last reading was 74. Very different than what we saw just a few months ago when it got to 10. But we have seen this market cycle, anytime it's hit 90 or above, within 3 weeks, the market has topped out. So I'm keeping a very close eye on that. But obviously, Bitcoin's making moves. If you look at the Bitcoin dominance, still up about 64%. Generally, for us in alt season, we need that to drop down, to the low 50s. I know I talked about this last night, but for those of you that weren't here, so always keeping an eye on Bitcoin dominance. I think we're going to start seeing the tide turn. Big announcement this morning. Helium has a grant program, $50 million grant program for network builders. I went in and looked at the details here. It looks like your hotspot must be selected for carrier offload for at least 14 consecutive days, deployed in a commercial location with high foot traffic, verified by Helium's location analytics. So they're kind of doing targeted deployments, kind of like what we're seeing with other projects, except that you're doing the deployment, but they're basically giving you a grant for doing so, which is pretty cool. Online and operational for at least 30 days, and you have to have a minimum order of 25 hotspots per purchase. So these are for some real hardcore deployers, but there's a lot of y'all out there. So I would definitely, if you're a big deployer, take a look at this program. This could really pay off, I think, if you're willing to do the work and install at some of these locations. Plus, it moves the network forward, and that is good. Helium has a lot of catalysts right now. I think this is a big move for them, $50 million grant program. So worth taking a look at. Just announced this morning. At least that's when I saw it. I don't know, it might have been there before that, but I'm pretty sure just today. Helium trading at about $3.89. Obviously, if we look again, last bull run, this thing, I think it actually closed higher than that. But a lot of that was Alameda Research pumping money into it. But one thing I have to say is this, again, last market cycle, all speculative buying. There is no real revenue. So to see, where we are now with all the work that's been done on this network, the revenue coming through the door, the real utility, I think we have a lot more upside ahead. Just a matter of when is the market going to bounce back, in my opinion. Let's see. Mike Horton had some words about the current tariff situation. I'm going to go ahead and play this video here. I have to do the tab. Boom. So the audio plays. I started it at 47 seconds.
To outperform. Geonet itself has three major initiatives that are leaning into this trade war. Number one, decentralized hardware production. In 2024, Geonet approved a second manufacturing location for Geonet hardware in India. So now the network has a hardware production at one company in China and at another company in India. In 2025, we've started efforts to add a Made in America miner. Back at the Consumer Electronics Show in January, we announced a partnership with Septentrio, and we are proud to note that a version of the Geonet reference station with the Septentrio GeoNetS will be produced here in the USA. Number two, RISC-V. For robots to make it into consumer hands, massive, low-power compute is required. Today's embedded systems largely use ARM cores, but these are expensive and face challenges as the architecture itself is controlled by a centralized for-profit entity. Geonet is hard at work on a roadmap to develop new powerful code, blending RTK, vision, LiDAR, and more for the RISC-V architecture. We'll talk more about this development soon. But by the way, Vitalik, co-founder of the Ethereum Foundation, posted last weekend on the possibility to use RISC-V to speed up the Ethereum virtual machine itself. While our goals are different, we agree that RISC-V is key to the future of Web3 and robotics alike.
I love it. Geonet is always adapting to the situation, always pushing things forward. And that's the next big thing for them, by the way, is robotics. Mike Horton talks about that a lot. They're obviously making waves in the agriculture field. U.S. Department of Agriculture is using the network. Drone surveys is another big one. But robotics is coming, and it's going to be a massive revenue stream for Geonet looking in the future. Speaking of Geonet, let's take a look at the price real quick and some of the token burns. We have things are sitting at about 21.44 cents, $68 million market cap. Y'all, in the last market cycle at the peak, this thing would have been like $1 billion project. I have no doubt in my mind. We just haven't seen the money flow into the alts as like we have in the past. So will that come? There's some people predicting that. Again, I'm going to talk about that in a minute. But looking at their Geonet Analytics, of course, it's a lot of great information here. Over 16,500 miners online now. And this is the main thing I look at is the revenue trends. You can see here, US dollar burn just continues to tick upward. They are seeing meaningful revenue. And with that, token burns, you see down here, these are the tokens that are burned. Currently, 1.36% of the token burns of the total supply, by the way. So Geonet always doing big things. I'm very large Geonet holder. In fact, I think out of my DePIN project, I believe it is my #1 holding right now. Let's take a look at WeatherXM. We talked about this a little bit last week, but just wanted to call a couple things out here. The targeted rollouts, they've raised $600,000 in capital, and they have over 2,200, just under 2,300 stations funded across 12 countries. and 11 different deployer partners. So they are making waves. But what I think is really remarkable, $600,000 raised. The market cap right now on WeatherXM it looks like they updated their circulating supply. They're $13.25 million market cap. Okay, so we need to do the math there. This recent fundraise just on these targeted deployments is a pretty substantial percentage of their total market cap, 4.5%, if my math is correct. So I am a WeatherXM, a WXM holder myself. I have deployments. This is one where, with the moves they're making, I think a lot of people in the community don't understand the moves they're making. And they think this project like died or something. I'm seeing messages about that. I'm like, guys, you need to pay attention to their socials. They are getting deployments out there. They are making moves. This to me is a prime candidate to see a major pump. I mean, $13 million market cap is very low, especially for a project making the moves they're making, the money being invested in that project. I did check CoinGecko just to make sure, and it does appear that is the correct market cap. Another project I haven't talked about for a while is Dynx. Dynx has caught a lot of FUD over time. One of the things they came out with recently is they said they're going to be a lot more transparent. This is something that, I had a call with them. I pushed them on. I said the same thing about, Hivemapper on our AMA. Transparency, I think, is super key. And with everything on chain, as far as the revenue and the tokens distributions, there's no reason not to be transparent with the community. This is something they're really building towards. And I have to say, they put out this new roadmap part of their website. And one of the things that I really was pushing them on is customer testimonials, because they have made a lot of claims. There's been a lot of people that have questioned their claims over time. I think that this is going to be really big for gaining back the trust of the community for Dynx, because they do have a real product, but I think it's really important for people that are using the product to talk about it, and not just coming from their team, given some of the FUD that they've seen. And if you look at their blockchain explorer there for Dynx, they are seeing a lot of jobs completed. But again, I think this will go a long way to see these customer testimonials. This is one that's been crushed. So if you don't believe the FUD, if this is a project that you think is doing real things, and I happen to think they are, at a $2.55 million market cap, this could be a really good risk reward if to buy the FUD if this project turns around. And I have to say, like, in my conversations with them, I do personally think it's a legitimate project. Of course, that's not financial advice. We've seen FUD be accurate over time in the crypto industry, but this one in particular, I'm looking at, because I'm like, well, shoot, take advantage of an outlier situation, which in this case, I think the price has really been beaten down because of a misunderstanding. That's my feeling on it. There's another post here about Arweave. I covered Arweave a little bit last week. It's really my only storage project that I'm holding at the moment. It's one of my larger holdings, but Solana, one of the co-founders of Solana made a mention of Arweave about how they're storing NFT metadata on it. And I went in to actually see, what did they say? And let's see, where's that at? We stuck the NFT metadata into Arweave, for this reason. Arweave's getting a tremendous amount of usage, y'all. And to me, let me pull up Arweave real quick. The price got down super low recently. If you look at the last month or so, what did it get down to? We're down into the fives, which is crazy. That's not far off where we were in the bottom of the last bear market, and the fundamentals in this project are unbelievable. And you look at this versus other storage projects, like the amount of circulating supply, it's basically all out there. So you don't have to worry about major dilution. That's one of the bones I have to pick with Filecoin. I love Filecoin as a project. They're getting a lot of usage, but they had so many tokens get unlocked. That's why I just had a hard time buying Filecoin, because of the amount of dilution that was coming. Arweave is one that I think, for me, is a long-term hold that I'm really interested in. That I think it's currently priced really well, in my opinion, to DCA into. Again, not financial advice. That's my personal opinion. All right, that's what I got in the deep inside. Oh wait, there's the announcement just came out about HiMapper. I think Ariel just posted it. Let me take a look here. He announced, there it is. You can now on Kraken, there are futures with up to 20x leverage for Honey. That's interesting. One of the things I'm seeing, one of the criticisms recently from the community is that there has not been enough liquidity for the Honey token. I'm curious to see what type of effect this has on the price of Honey moving forward. Obviously, it's been crushed like a lot of the other projects out there, trading at just under 2.9 cents. If you remember, during the Coinbase listing just over a year ago, it got up to 33, 34 cents. So pretty wild. I think, Honey is one too that Kathy Wood mentioned recently. I think it's one of the DePIN projects that, as retail is starting to look to get back into the space, I think you can get a lot of investment because it can make sense very easily to the average person, as opposed to trying to understand DeFi, or just blockchain in general. When you talk about creating a map to go head to head with Google Maps, a fresher map than what exists, by putting a dash cam in your windshield, I think that's super easy to explain and for anyone to understand coming into the space. And I think for that reason, and they announced like a partnership with Lyft, I think we could see Honey have a comeback here. But again, we need market conditions to get a little bit better. Of course, we're going to talk more about that. All right, let's see here. What do we got? Oh, we got the broader crypto news. Oh yeah, we got some big news there too, particularly with the bill that is coming up for a vote today. Actually, it might be like within the next 30 minutes, I believe, is coming up for a vote. But let's get into the broader crypto. Let's see here. We've got, I think this is it right here. Yeah. Senate expected to vote on the stablecoin legislation at 3. Oh, it just happened. So I wonder if we have any word on that. If anyone's looking, if we have an outcome from that vote, definitely put it in the comments. Also, if you haven't liked this, please do so. It helps with the algorithm. If you're on X, like it, share it, retweet it. If you're on YouTube, make sure to like it, and make sure you follow me on both platforms. I've got some interviews coming up. I got one tomorrow, actually. I'm going to interview a handful of founders. That gets posted on my YouTube first. I normally do share it on X as well, but yeah, I do have some things that I don't always post on both. So make sure to follow me on both platforms. But this is a big deal. This stablecoin legislation, this is really going to open up the door for crypto to take the next step forward, in my opinion. And there's one thing I want to talk about that is not being covered, as in this video I'm going to play in a second here about this bill. But it does sound like there's some optimism this thing's going to get passed. So again, if y'all in the comments, let me know if there is anything that's been approved here. But this is the video I want to play. I gotta share just the tab so that I can play the audio on this. And this has to do with the bond market woes that we're seeing right now and the lack of demand.
And 80s, which is slow. It takes days to clear. So the issue, as far as I've always understood the stablecoin issue, is what is backing this stuff, and how much of it's backed by actual treasuries versus cash versus equities or something else. What does this say about all of that?
It's not going to be equities. It's going to be high quality, short-term assets, either short-term short-term U.S. treasuries or cash. I think the majority of it will be U.S. treasuries. In fact, what this will do, and the projections are by 2030, this is according to Citibank, stablecoin issuers will be the largest holders of U.S. treasuries in the world.
How about that? Stablecoin issuers are expected to be the largest treasury holders in the world. This is a big deal because right now, you got $9 trillion of debt rolling over. We need demand for treasuries, T-bills as well. By the way, treasury bills are just, a year or less in duration. Anything over that is a bond. So kind of the same thing, both treasuries. But that's a big deal. This is going to increase demand for us to finance our debt. I think that's a big reason. I talked about this last week a lot. I think that's a big reason why this Middle East, trip that Trump took, I think it's going to be a big deal because we need to have more demand for treasuries. So big deal if this passes. It looks like people are expecting it to pass. We'll have to wait and see. But that vote should be taking place right now, if not already completed. So if we don't have an update by the end of this, I'm going to stop at the top of the hour here. Then I will cover it tomorrow. All right. What else we have here? Let's go to the next slide over. Oh, this broke this morning. MicroStrategy is being sued in a class action lawsuit, basically saying that they weren't transparent enough about their claims. Looks like Michael Saylor's fighting back. And just to show how much he cares about this, they bought another $764 million, almost $765 million of Bitcoin. So I don't think they're too worried about it, but we'll see how that plays out. I have to say, though, this is a threat. Like, if MicroStrategy ever were to go down, it would absolutely crush the price of Bitcoin. I would personally look at that as an opportunity because I still, regardless of MicroStrategy, I believe in the long term for Bitcoin. I would be buying the shit out of it if MicroStrategy did go down and give us another opportunity to enter at low prices. I'm adding, I'd DCA now. So if that were to happen, I would be unloading the truck personally. What else do we have? We've got Australia. I thought this was pretty wild. 7.5% of Australia's population owns crypto. That's pretty high. I mean, it's a lot higher than the average around the world, but this was ruled on today. And I bring this up because I think we're going to see more and more of this. But basically, the judge ruled that Bitcoin's a form of money, so it could exempt it from capital gains tax. And this is super important because if Bitcoin ever is a medium for payment, if you're taxed on it every time you spend it, or have, gains or losses on your holdings, that's not really ever going to be a smooth way to use Bitcoin. So this is something that when I was at Consensus and RFK spoke last year, about a year ago, he talked about getting rid of capital gains on Bitcoin so it could be a medium of exchange. Because again, right now, anytime you would spend your Bitcoin or sell it, it would be a taxable event one way or the other. So I think we will eventually see that change. Jamie Dimon of JP Morgan. Do you all remember this? They fudded Bitcoin so much over the years. But there's a period not long ago where he said that he would fire any employee that was trading Bitcoin. And now he's saying, hey, yeah, our clients can buy it. We won't custody it for them, but we'll allow it. So the tides are turning. The tides are turning. Banks can't get away from it. And actually, that's what I'm going to talk about at the end of today's session is the trouble that our banking system is in, because it is not pretty. And the more our bond rates or bond yields go up, the worse it gets for our banks. And one other thing, and I've talked about this a lot, but Asia's richest investors are abandoning the US dollar in favor of gold and Bitcoin. We've seen this. I've talked about this several times that the Asian markets especially are buying a ton of gold right now. And we're seeing that fiat is dying. You see this comment down here. I think we're seeing this. I covered this last night, but with the long-term duration yields increasing everywhere across the world right now, I think we are seeing a distrust in fiat, and rightfully so. The central banks around the world are going to have to continue printing money. Like that's just, they're going to devalue currency forever. And the bigger the hole they get in, the more money they're going to have to print. Eventually there is going to be a reset, but in the interim, I'm hedging with Bitcoin and gold. Okay. And I think that is the move right now. Not to say there's not other opportunities. Of course there are. I have a lot of DePIN plays as well, but gold and Bitcoin, I believe, are really the major hedge here against the reckless, and I say reckless, like really reckless fiscal policy across the world. We saw that with Moody's. We're going to talk more about that, actually. Talk more about that. Let's get here. Let's see. I talked about this last night too, but the downgrade of the U.S. debt. Now, there are a lot of people out there saying this is the first time it's ever happened to the U.S. That's not true. In 2011, we saw the S&P downgraded it. That was when Obama was in office. We saw it with Biden in 2023. Now Moody's is downgrading it. So I'm not saying it's a nothing burger. I mean, this is obviously showing that, hey, there's risk. In fact, there's a lot of people saying that they're not baking in enough risk because not only is the default risk is low because we can continue printing money, but when you consider the bonds that you'd be holding and the devaluing of the currency behind them, there is a lot of risk, right? I think the expectation for many is that the inflation is going to be at a position where it's out of control at a certain point in the future. But all that said, I mean, the stock market mostly shook it off today. I mean, it started off down, but it's pretty much rebounded at this point. So I think some of this was baked in, with the bond markets and the things we're seeing with the 10-year and the 30-year climbing. I think a lot of this was baked in, frankly. And we'll see. We'll see what happens if things will improve. Obviously, there are plans from the current administration. We'll see if they'll be able to execute on that and bringing down the debt, or at least the deficit. One of the things that came out recently in the last day or two, this actually came out this morning, I guess, that they said they expect that China producers will be absorbing the cost of the tariffs. This is off the heels of Trump talking about Walmart needs to swallow the tariffs. What's up, man? What's up, Cali Crypto? Welcome. Yo, make sure to like and share. If you're watching on Twitter, retweet. If you are on YouTube, make sure to like. Helps with the algorithm. Appreciate you all. So they want China to absorb the cost. Then they say they want Walmart to absorb the cost. I do want to play, though, this part of this interview. This is an interview with Tucker Carlson and Scott Besson. I think this is worth a listen, at the very least. Again, I need to share this real quick. I need to share the tab so I can play the audio. It's kind of annoying, but it's not that big of a deal. Here we go. All right.
And if we think like a classical model of tariff income would say, if there's a 10% tariff, then the currency would appreciate about 40% of that, so 4% of it. Then the producer in the other country would eat about 4%. And then the U.S. consumer might have a one-time price adjustment of 2%. So, in a 10% tariff, maybe the consumer pays 2% of it. We saw there's a study out recently from a group at MIT.
If you want to drop your auto insurance rate, then don't skip this video. Take a look. I've removed my personal info
definitely
guide.
skipping that video.
It shows that with President Trump's first China tariffs, which were approximately 20%, the price level went up 0.7. So to answer your question, if we could put on a 20% tariff and have the foreigners pay that and use that money to bring down our government deficit and keep taxes low here, that's a very unique formula that hasn't been tried in this country for a long time.
And do you think?
So I thought that was very interesting. We did put 20% tariffs on China in Trump's last presidency. University of Michigan puts out a lot of these financial studies, and they found that it resulted in a 0.7% increase to consumers. So very much of that, I mean, part of that is that our currency is stronger. And he mentioned that China purposely keeps their currency weaker than the US dollar because that gives us more purchasing power, right? As an exporting country, that helps them. So that kind of eats part of that tariff cost, if you will. But then, the manufacturers eat some of it, and then, the companies over here do. Now, I will say one of the things we're seeing with companies today is that I think a lot of them would love to pass the cost on to consumers, but the consumer sentiment, I'm going to talk more about that in a minute, is so low right now that they can't do it. They can't pass that cost on, or people will just stop buying their goods or stop using their services because, frankly, consumers in a dire spot at the moment. But that's why I think, he used that 10% example at the beginning of that statement there. That's where that's where things stand, at least for countries outside of China today. Granted, we're still in this 90-day pause, and that those deals need to be made. But I think that the inflation expectations are being a little bit overblown. And if you look at it broken down between Republicans and Democrats, it's like Republicans are saying, oh, there'd be zero inflation. Democrats are, I'm seeing as much as expectations of 7% inflation from the tariffs. Like most things, I think it's somewhere in between. I don't think it's going to be zero. I don't think it's going to be 7%. I think, it'll be a one-time price adjustment in the middle. And I think we'll see how it all plays out. But we do need some of these trade deals to be made. And one of the things I will say that came out, I think it was this morning as well. I'll show you what I'm talking about here. Here it is. That Besson came out and said, if countries are not negotiating good faith, they will get a letter with the U.S. tariff rate. And I think that rate would be the April 2nd level. Those are the outrageously high levels that they put out there to begin with. So, there you can see down here, someone's like, this is mostly posturing. Yeah, maybe it is. But it also makes me wonder, are these negotiations not going as well and as quickly as they had hoped? This is a threat. I mean, we have to think about this with the markets. If we get close to that 90-day expiration and we don't have a lot of these trade deals set yet, especially with their bigger trading partners, we could see that impact markets in a negative way. So we need to keep an eye on that, as we get closer. And I would say the sell-off would happen before the 90 days is up, because people are going to want to get ahead of it. Obviously, they're not going to be the one. You want to be the last ones to react to that. So there should be some volatility there unless we start to see some major improvements on the current trade negotiations. Another thing I want to call out here is this Japan 40-year yield. This guy said this should scare your mother. You and your mother should be scared out of your minds. I talked about this, a lot recently, which is the Japan reverse carry trade. We saw this last August, man. This crashed our markets when the Japan yields increased. Now, Japan is like, the Bank of Japan, I think, holds like 54 or 56% of their domestic treasuries, which is outrageous. I mean, that's pretty crazy. But the problem is we have a lot of exposure. I mean, our economy is very interlinked in the sense that people have taken out loans over in the yen because it's been so cheap to do so, and then transfer that into other currencies like the US dollar to invest in our stock market, to invest in real estate. And if this yield continues to go up, this could start to unwind that trade again. And that's something we need to pay a lot of really, really close attention to. But Japan is in a really bad spot, y'all. Like their debt to GDP is the worst, or maybe like top 2 in the world. And they have a declining birth rate, and they will not bring in any immigrants to offset their declining birth rate. And if their economy tanks, it's going to take a lot of other economies with it. Not to say that I think we're done, but it would hurt. There'd be some short-term pain there for sure. So another threat. And then I thought this was interesting. Per Fortune, it says that their historic work ethic is declining. 45% admit they're quiet quitting. you all know what quiet quitting is. This is a term that's come up a lot in the U.S., especially, I think right after COVID, where people just kind of do the bare minimum to collect their paycheck until they get fired or let go. So they're seeing a lot of that over in Japan right now. So things are certainly not great, but not great here either. And it's not just the U.S. I mean, we're seeing these types of trends everywhere. But again, University of Michigan's consumer sentiment fell to the lowest since 2008 crisis, since 1980. This is pretty ugly. It's pretty ugly. So, are we moving into recession? I don't know. I'm not saying that we definitely are, but I'm also saying it's not off the table, and it's something we need to be aware of. This is something I mentioned in my stream last night. Particularly, I talked about credit cards and auto loans, but you're seeing delinquencies on basically, all types of credit are increasing. The 90 plus days on balances are going delinquent, rather. That's not a good sign. That means that people are hurting. Consumer sentiment is low. So, the underlying economy has been cracking. Okay, so that doesn't mean that the stock market's going to crash right away, but you have to think all of this stuff is interconnected. If consumer sentiment is low, people aren't out spending money. People aren't out spending money. Companies' revenue is dropping. They have to lay people off. It's this vicious loop, if you will. So then always the question comes down to, is the Fed going to act? I talked a little bit last night about how they've been doing some stealth QE, quantitative easing, but what are they going to do as far as dropping rates potentially, or some official quantitative easing? Well, we're seeing it with China. They're cutting deposit interest rates on Tuesday, so they're dropping rates. They need to stimulate their economy. China's in a bad spot. Their banking system has been in really bad shape. They had to bail it out last year. Their real estate market crashed. I mean, China's not in great shape. Of course, neither are we. I'm going to talk about our banking system. But the good news, we had this come out. The Fed came out and said central banks are ready to provide liquidity. Of course they are. Y'all, of course they are. That's the one thing we learned in 2008 is anytime we have a recession, the central banks are going to be there to bail them out. They're going to bail out the economy. They're going to lower rates. They're going to start quantitative easing. It's just a matter of when's it going to happen, right? Are they going to wait too long to where we move into recession, or are they going to start soon? I don't know, but you know what did crop back up today? There was a court ruling that said the president can now fire Fed Chair Jerome Powell. Oh, I thought this was behind us. We're going to start seeing some interesting tweets, I'm sure, from Trump about this. So get ready. Oh man, I wonder. Actually, I haven't looked at the new Poly Market odds. I'll pull that up in a second. Poly Market's been so accurate; it's been crazy. But here's one thing that's kind of mind blowing to me: is that in the stock market, retail investors have been buying stocks at a historic pace. It's the smart money, I guess, the institutional money that's been selling off. So retail has been holding the market up, and it's like, who is right? But the other thing that this really has called my attention to is one of the reasons I feel like we haven't had a huge alt season in the crypto space is because there's been a lack of retail. But am I wrong? I mean, is that not the reason? Because if retail is buying the shit out of stocks, why haven't they come into, crypto? Maybe they're exhausted. Maybe too many people got rug pulled from the meme coins. I don't know. But my feeling on this was always, hey, people don't have money right now. But apparently people do. So I'm not really sure. I think that, you look at the stock market, though, I think it's something like 50% of the market is owned by the top 10% of the wealth in this country. And then the next 50% is owned by the remaining 50%. The bottom 50% of our country has zero equity, zero stock. And I'm wondering if, those are the types of, segment of the population that was investing in crypto because, they're looking at stocks as like, hey, yeah, great, I can get a return, but, we want to get ahead. and maybe they're willing to take on more risks to get ahead. Maybe that's what we're seeing, but I don't know. I thought that was really interesting that we haven't seen the retail come in the same way that we have before. Now, I think it will change as the macro economy gets better, and we need to see some improvements there, in my opinion. Let's go to Polymarket, though. I haven't looked at that this week. I want to see some of the predictions here. I talked about this last week, but when looking a month out on Polymarket, they've been 91% accurate, which to me is just absolutely bananas. All right, we need to share my screen here, show you what I'm looking at. I want to get into finance economy. There we go. So we are now looking at %. So there's 90% of chance right now of no rate changes in June. What about July? 74. So only a 26% chance. Oh no! So there's someone's betting on a rate increase. Oh, good Lord! I hope that doesn't happen. But so 25% chance of a rate decrease, looks like, roughly. I'm looking out to September. It looks like the market is expecting a rate drop in September as of now, but this are about 50-50, 57% chance of not. This has shifted a lot. I think it's going to be really important to see what Jerome Powell comes out and says here, and then how these tariffs start to have their impact on inflation. If you look at like trueflation, so the Fed goes off a CPI, right? So consumer price index. A lot of times that's a trailing indicator. Trueflation uses a lot more data points, and it's a lot more real time, okay? Because CPI uses like surveys and things. So right now it is ticking back up, okay? So we did see this thing get really low. This is interesting. I haven't looked at this in a couple of weeks. So we're sitting at about 2% on the trueflation. Don't forget, last week Powell came out and said, "Hey, it might be time to change the target inflation rate." It's been 2% for, as long as I can remember, my whole lifetime. I forgot the history on that, on how the 2% target started, but that's basically the target for all central banks around the world, and the Fed. But they said they might change that. Jerome Powell came out and said it might be time to change that target rate. I thought that was really interesting. But we're sitting at 2% trueflation. I don't know. I don't think we necessarily need to see rates drop, though. I think if quantitative easing happens, that could have the same impact. We have seen them start to push money back into the markets. They haven't really announced it. They've been doing it like the reverse repo markets and other ways. But we'll have to wait and see. The bond market is obviously something we need to pay close attention to. Before we get into that, though, because I'm going to talk about our banking system, the bond market, and all that, because I think it's really important to understand what's happening there. It's a little bit worrisome, frankly. But we'll see. I'll talk about how that could play out. But let's talk about a couple things that happened today. If you all remember last week, well, let's just set the stage for this tweet. Last week, there was talks about Putin and Zelensky meeting in Istanbul. And, Putin threw it out there, and Zelensky's like, yeah, let's make it happen. So Russia ended up snubbing Ukraine. Basically, Putin's like, nah, I'm not going to go. They sent some like low-level negotiator that had not been involved in any of the negotiations up to that point to the table. And nothing really got done, obviously. And I think the sentiment coming out of that was, okay, Trump needs to be involved directly himself. So this morning, Trump had a call with Putin. Now, I've been looking into this quite a bit and doing some research on what's happening here. It sounds like Zelensky was like, hey, yeah, we want to have an extended ceasefire. And I don't think that Putin's coming to the table in good faith at all. I don't think he wants to resolve this, frankly. I think he's trying to buy more time. And I found a couple of these facts interesting. Number one, think it's estimated like 30% of Russia's GDP right now is based off of them building weapons. And so I would say that's very much a misrepresentation of like adding long-term value to their economy, because they're building weapons and, taking tanks into, in a war, and then they're getting destroyed within a month. That's really a misrepresentation of the true value of their GDP, in my opinion. The other thing I thought was really interesting is that Putin recently was able to add a lot of soldiers. And that's because when Trump was elected, they started I guess a lot of people thought that there would be a peace resolution between Russia and Ukraine very quickly. That was one of the things that Trump campaigned on. And I guess the average monthly income in Russia is about $1,200 a month. So call it $15,000 a year. These soldiers were getting a bonus up front of between $20,000 and $25,000. So, call it a year and a half to 2 years of income in the form of a bonus. And I think a lot of these soldiers signed up after Trump was elected thinking like, hey, this thing's going to get resolved. Obviously it hasn't, but because of that, Putin's gotten a lot of soldiers, over the last few months. So, I think he can draw this out a little bit longer. Regardless, looks like Trump and Putin spoke for a couple hours this morning, and he's saying at least that they want to end the war. So we'll see what happens here. We'll see how this plays out. That would certainly be a good thing for markets if this thing gets resolved. Any of this stuff around the world right now, if we get resolutions, that creates more certainty, that helps markets. And obviously the main thing though is that there's like 5,000 people dying every week right now on both sides. So, the senseless deaths can stop. So hopefully they can come up with a resolution. But I will say this much. The US and Europe, they're calling for much more aggressive sanctions on Russia right now. We already have a lot of sanctions on them. We basically cut off all their banks from using, what's the payment system? I'm drawing a blank. The international payment system. It'll come to me in a second. But we basically cut them off from using the international payment system that we use. Can't believe I can't remember that right now. Anyway, but it'll be interesting to see what type of sanctions we put on them. Oh, the other thing, Russia is very reliant on oil, and the price of oil being down right now, as far as it is crushing them right now. So Russia's in a bad spot. SWIFT, thank you. That's what I was looking for. So I don't know. So we'll see how this plays out. I would expect that we'll see more sanctions on Russia. I think we're wanting to get this thing resolved, though. JD Vance came out today and was basically like, look, if we can't get this thing resolved soon, we're going to basically let them duke it out. I'm like, okay. Smash the likes. Yeah, smash the likes. All right, what else do we have here? Oh, God. Trump came out and said he's going to investigate Kamala for paying for endorsements. How much did Beyonce make? I think they did probably pay some people, but it's like, dude, you've got way more important things to be focusing on right now than going after Kamala. Like, what the hell? I think it's just ridiculous. But anyway, whatever. Couple other stories before we get into our banking system. I'm gonna get done here pretty quickly because I don't want to conflict with Julie's show. All right. This was something interesting, I thought. So at this college engineering professor put out a problem set for LLMs to solve, and yet his TAs grade the results. They didn't know whether it's a student that submitted it or an LLM, AI. And ChatGPT was ranked 27 out of 36 students. Gemini ranked 2.5, or sorry, Gemini 2.5 Pro ranked number 4 out of 36 students. AI is coming, y'all. It is coming. It's pretty wild what we're seeing there. This is something I was reading too. I was out on the golf course this weekend. I mentioned that at the beginning of the show, but this is wild. There is a new study that shows living close to a golf course within a mile is doubling people's risks of developing Parkinson's disease. And they're thinking that it is all the chemicals they're using on the golf courses is running into the water, the drinking water. So I actually looked into the results, and that is indeed, it was about double if you're within a mile of a golf course. I'm like, holy shit, man, that's crazy. And I was just talking to my buddy yesterday about how, man, the dream would be in the winter to get out of Chicago and live on a golf course somewhere. Like, maybe not. I don't know about that now. And one other thing I wanted to show, this, I think this is freaking. If you're a basketball fan, this freaking LED court, they can change the logo on it. They can draw up plays on there. It's pretty cool. Watch this. What? That's wild. That's wild. All right. We are going to talk about, we're going to close out the show here, y'all. I want to talk about our banking system because it is problematic, to say the least. And this is coming back up right now. Let me make sure I have the right screen here. Yeah, here we go. I'm going to play this video. Go to the tab here. Let's go to the beginning.
Bonds that there is no way we can finance $36 trillion without the world's reserve currency. No way. And I'll tell you guys, if you look at Bank of America's balance sheet, you will find they own $500 billion worth of treasury bonds that have less than a 1% coupon, which means the value of those bonds, if we have to try to finance it 7 or 8%, value of those bonds is zero. And Bank of America will be insolvent. And do you think that ATMs will work? Do you think that the financial system will work if Bank of America fails?
Subscribe to my daily.
Guys, our banking system is like, I don't normally curse, but it's kind of fucked, guys. Like, I'm not gonna lie. Let me show you this article here, and I'm gonna walk you through what exactly I'm talking about. So, oh man, so our banks are sitting on massive unrealized losses. Okay, basically, what happened was back during COVID, if you think about like the short-term yields, on treasury bills, they weren't yielding really anything. And when you put your money in the bank, they're basically taking your money to get a return on your money. Okay, they're investing in different places. A lot of these banks bought longer duration treasury bonds to make money on your deposits. The problem is, as the treasury yields on new issued treasuries increases, their bond holdings become worth less and less. And basically these banks are sitting on, oh man, I can't show it. I was looking at it earlier. What the heck? Well, yeah, I don't have a subscription to Fortune. But basically what's happening is these banks are sitting on massive unrealized losses, over $500 billion. The more this 10-year treasury rate goes up, let me pull it up real quick, and it has been climbing. The more this 10-year treasury rate goes up, the more problematic it is for our banks, the bigger the losses they're sitting on are. Now, it's not a huge issue unless people start to go and withdraw their money because the banks don't have it. Okay. So it could get to a point. This is what we saw at Silicon Valley Bank. They essentially, people went for a bank run on them because they're like, hey, we want our money out. And they're sitting on massive losses. And they had to liquidate their holdings and that they had invested in. They didn't have enough money to cover everybody. Now, that's the big problem with these treasuries. Like, the more this 10-year rate goes up, the worse it is for our banking system. And you're going to hear more and more about this. So the government is going to be faced with a really difficult decision if this happens. Well, they need to push down the treasury rates. So two things I've talked about that can do that. This stablecoin bill, if it passes, as I played earlier, it's expected that stablecoin issuers could become the largest treasury holders. So we can increase demand on treasuries that can push that rate down potentially. The other thing is, I think the Middle East, some of these deals we made with bringing money into the U.S., we need them to start buying treasuries. We also could, force more domestic holders on treasuries. Regardless, though, we need to push those rates down. If we don't, our banking system is in serious trouble. and if let's say we do see a banking, run on the banks, the government is going to be faced with either letting our banking system collapse. And remember, FDIC insurance covers people up to $250,000. And they have to push more money back into that insurance, right? But still, what they did with Silicon Valley is they made everyone whole, even regardless of what their balance with Silicon Valley was. They went above the FDIC insurance and they bailed everyone out. To do that with one of these bigger banks, you know what the cost would be? I mean, it'd be astronomical. So the question is, do you think they'd let the banking system fail, screw over, the population, or are they going to bail them out? I bet they would probably bail them out. They would have to. But what does that mean? Well, it means printing more money, guys. It means printing more money. Like all of these different things that could break, we're going to expect the Fed to bail us out. We're going to expect, the central bank to print more money. What does that do? Well, that devalues our currency. Again, Bitcoin and gold are the big winners. Okay. And that is my main takeaway here for y'all. Gold and Bitcoin, man, I'm hedging. I'm looking at other opportunities too, but I think long-term, that's where I'm looking, man. Cause I just, there's too much that can go wrong. And it's going to require bailouts. Anyway, y'all, I appreciate, hold up. Chadlink. ICUP. What? Now working on Solana. I don't know that one. We used to make jokes about ICUP. We used to be like, spell ICUP when we were kids. Thought it was hilarious. Anyway. All right, y'all. I appreciate everyone that came. Thank you for commenting. Make sure to like it. Make sure to share it. And I will be back tomorrow. Head over to Julie. She's got her live stream going normally at 3:00. I'm sure she's live already. So I want to hop off so I'm not running over on her live stream. Cheers, y'all.